Hello and welcome back to the Startup College Business Data Analytics course. Last time, we were able to construct a simple profit and loss account as well as a balance sheet from the trial balance. Today, we shall be looking at the cash flow statement, how to prepare a cash flow statement when you are given a set of financial statements, when you are given the profit and loss account as well as the balance sheet for several periods and you're expected to construct the cash flow statement. The first step we shall look at is what is a cash flow statement and what is the format, how does it look like. And we know that a cash flow statement for our company simply shows the cash coming in and going out of the company so as to arrive at the closing cash flow balance in the balance sheet. So it simply aims at reconciling the opening cash flows of the company vis-a-vis the closing cash flows of the company. And the cash flow statement is divided into sections that categorize the cash flows. For instance, we have cash flows from operations. Now, this consists of the day-to-day activities of the company or the business. This includes the core business of the company, things that the company does to achieve its main purpose. And in this, we have several adjustments such as adding back depreciation, because depreciation is an expense but a non-cash expense. And when we begin with the net earnings are arrived at by subtracting depreciation as one of the expenses. So as the first step, we add back depreciation. We also have the accounts receivables. If the accounts receivables decreased, you do what? You add it to the cash flow from operations. If it increased, you subtract, because it implies that you have invested in the accounts receivables. We also have the accounts payables. We also have the taxes payable. All these are elements that can be found in the balance sheet, the current assets as well as current liabilities. We can see an increase in inventory is a cash outflow, because inventory, you buy them or you invest cash in them. And by doing that, you get the net cash from operations. We also have cash from investing. Now, this includes the accumulation of non-current assets. When you buy a non-current asset such as equipment, in this example, cash flows out and therefore you subtract it. We also have cash from financing activities. This includes not only notes payable, but you also have items such as common stock. We also have items such as long-term liabilities. All the items or all the things that are used to finance a company, whether it is long-term debt or equity. Now there you shall use your knowledge in accounting in determining whether it is a cash inflow and a cash outflow. Now, we have looked at the basic format of the cash flow statement, the theoretical bit. Now let us look at the practical bit. Now, to do the practical bit, we shall use a past paper question, and this is the December 2022 pilot paper, question number 22. So the question reads, you are provided with the following extracts of the statement of profit or loss and statement of financial position for Darubini Limited for the years ended 30th June 2022, 2021, 2022. Darubini Limited statement of profit and loss, we have all that: sales, gross profit, operating, net profit. Statement of financial position, we have the assets, non-current assets, current assets, total current assets. You have the equity and liabilities, equity, total liabilities. And the first part, you are required, prepare the statement of cash flows for the company for the 2 years ended 30th June 2021 and 30th June 2022. So the first step here, we what we do, we divide the screen. We can divide the screen. We can open up our Excel. And the first step I always advise is to create the format of the cash flow statement or the skeleton of our cash flow statement. And we begin by setting up the format whereby we start with cash flow from operating activities. And the first thing on the cash flows of operating activities, we begin with net income, right? We are not filling in the figures at first, we're just setting out the items that are going to be in our cash flow statement, some of which we are going to have to calculate. So the first step is to set up the skeleton or the format. So we begin with net income, and then now we look at our balance sheet and we can see inventories here was increasing from 2020 to 2022. So what do we say? No, before we go there, remember depreciation. The company had depreciation for the 3 years. So what do we say? Add back depreciation. Secondly, we look at increase in inventory. Then we also have receivables that were increasing. So when the inventory is increasing, we are going to less it. So less increase in inventory, less increase in receivables. And then that's it for current assets. We do not include the cash and cash equivalents. So we moving down. We have accounts payable was also increasing. And if it's increasing, that signifies a cash inflow. So we say add increase in accounts payable. And then we also have bank overdraft. Bank overdraft, if we look here, increased and then decreased. So we just say change in bank overdraft. Change in bank overdraft. And then now that's all for. So once you have all the items in the cash flow from operating activities, we can calculate the net cash flows from operating activities. Once we misspelled activities. Once we have that, then we can move to cash flows from investing activities. We keep on misspelling the word activities. Cash flows from investing activities. And under investing activities, we look at the non-current assets and we can see they were increasing. And then we say increase in non-current assets. That's the only item under investing activities. Then we can say cash flow from investing activities. Now our cash flow from not investing but financing activities. Cash flow from financing activities. And under financing activities, we can see long-term borrowings were increasing. So we say increase in long-term borrowings. Now, once we have financing activities, investing activities, and operating activities. Those are the three components of the cash flow statement. Once we have all that, we are going to be able to calculate net cash flows. Simply, net cash flows for the period. Right? So we have these particular items, and all that is left for us is to populate it, right? Populate. So let us adjust the width of these columns by double clicking on the A column. So we have the cash flows. So the first thing, we can highlight the topics, or we make them bold by clicking on the cell and hitting Control B. Clicking, that's the cash flow from operating statements, and then we have cash flows from investing activities, Control B. Cash flow from financing activities, Control B. Higher. Now we have the format or the skeleton, and we are required to find for the years ending June 2021 and June 2022. If you look here, June 2022. So the first shall be June 2021 and 2022, and we can also have the topic, or rather the title, and our title is, we are told the company's name is Darubini Limited, and here we say statement of cash flows for the years ended, 30th June, right? Let us adjust by just come here on top at the column A and double click it, and it will automatically resize. So this we can make it bold, because it is a title, by hitting Control B. Now to begin, net income for 2021, we simply look at the statement of profit and loss, and we can see 2021 it was 10,133. So one thing is that we need to format these cells for them to be in comma format. So we highlight this section like that, you can highlight the whole of it, and then we come here and we click on the comma, and then we remove the decimal points, and we have our 10,133 for 2021, straight out of the profit and loss account. For 2022, it is gonna be 12,429. That's the net income for the period. We are required to add back depreciation. So what was the depreciation figure for 2021? 800. 800. Hit tab. For 2022, 750. Then we have increase in inventory. So we are less the increase in inventory. So we type equals, and you're supposed to subtract it. So write minus sign, open brackets. Now find what was the increase in inventory from 2020 to 2021. Now we just come to the statement of financial position, or the balance sheet. Go to the inventory section, and you shall see that in 2021 it was 21,750. So write 21,750. And then in 2020, it was 15,000. So minus 15,000. Close brackets, hit enter. It automatically comes off as negative because we introduced the negative sign before we opened the brackets. Then for 2022, it is going to be the same formula, equals minus open brackets. We look at the figure for 2022, and it was 27,488 minus the figure for 2021 was 21,750. Close brackets, hit enter, and we have that. We do the same for less increase in receivables. When receivables are increasing, it means people owe us more. They're not paying us, and therefore it is like the cash flow, it is like a cash outflow because it is a negative cash inflow, if you understand what I mean. So add increase in, less increase in receivables. Same formula, equals minus open brackets. You look at the receivables figure for 2021, which is, we can see here it is 8750 minus 4500, close brackets, hit tab. For 2022, the same, equals minus open brackets 15460 minus 8750, close brackets, hit enter. Then we had an increase in accounts payable. We are supposed to add it because when the accounts payable are increasing, remember accounts payable is what we owe. If they were decreasing, it means that we were paying them off. Hence, it's a cash outflow. But if they are increasing, it means that we are not paying them off. So what is it? It is a negative cash outflow, meaning it's an inflow, right? So how do we calculate that? Equals, this time round, we do not introduce a negative sign or a minus sign because they are increasing and you're supposed to add. So equals, open brackets, the cash, the accounts payable for 2021, which is, we can see here, which is 6658 minus for 2020, which you can see here, 3750, close brackets, hit tab. For 2022, the same, equals, open brackets, we have this figure here, 7989 minus 6658, close brackets, hit enter. Then we have change in bank overdraft. We can see the bank overdraft from 2021 to 2022 increased, meaning that we got more overdraft and therefore we add. So equals, open brackets for bank overdraft, you have 9322 minus the figure for 2020, which we have here as 5297, close brackets, hit tab. And then for 2022, it reduced to 0, meaning that we paid it off completely, and therefore it was a negative cash outflow. We write equals minus open brackets. We can already see that it is 9322. So if it was 9322 for 2021 and it became 0 in 2022, it means that you paid it off in full. But let us just write for the sake of consistency, 9322 minus 0, close brackets, hit enter. So what does that mean? It means that it was a cash outflow. So what was the net cash flow from operating activities? We simply add all these, right? We simply add all these using the formula that we learned in Excel, equals sum, the sum formula, and then you highlight all these from B45 all the way to B50. Close brackets, hit tab. Go to the bottom right corner of this cell and drag the formula to 2022. You don't have to redo the formula. And as we can see, there was a positive cash flow from operations in 2021 and it was negative in 2022, right? So to make this nice and neat, we introduce top borders. We highlight the two cells and then we come here and we click on top border for it to show that it was a sum. Then moving on, we have cash flows from investing activities, increase in non-current assets. Now, let us look at the balance sheet. And the non-current assets were increasing. Remember, we have not been given data on accumulative depreciation, right? There is no accumulated depreciation. So we assume that every increase in property, plant and equipment was due to acquisition. So how do we calculate that? For 2021, it was an increase in non-current assets, and therefore it was a negative cash flow. We bought the non-current assets. It is the assumption that we make. So it is going to be negative. So we undersell B53, we write equals minus sign, open brackets, and the figure for 2022 was 45200 minus the figure for 2020 for property, plant and equipment was 25800, close brackets, hit tab. For 2022 equals minus, open brackets, the figure for 2022 was 46700 minus 45200, close brackets, hit enter. Right? That was the increase in non-current assets, and that was the only cash flow from investing activities. Moving now down to cash flow from financing activities, and we have increase in long-term borrowings. We come to the balance sheet here. We have the long-term borrowings were increasing. So if they were increasing, that was a cash inflow. It means that we cash came in by borrowing. So how do we calculate it? It's going to be positive, equals, open brackets, we take the value for 2021, which is 46667 minus 33333, close brackets, hit tab. For 2022 equals, open brackets, 60,000 minus 46667, close brackets, hit enter. Now we have all the elements of the cash flow statement. We have the cash flow from operating activities, we have investing activities, and we have financing activities. And now we can calculate the net cash flows for the period by simply adding all the elements. Net cash flows from operating activities, from investing activities, and from financing activities. So here we write equals this figure B51 plus B53 plus B55, hit tab. So we can see 800 for 2021, then we drag it and we can see 4,573. That was the cash flows, net cash flows for the two periods. And then we can introduce a top border to make it neater and clearer. So now we have formulated our statement of cash flows for the 2 years, 2021, 2022. But what do you do when you finish doing your work and then you realize that you made an error? So we have, let's write there, opening cash balance. So the opening cash balance for 2021 here was 0, right? It was 0. This is the figure. So the opening cash balance for 2022 was also 0. We have closing cash balance. Now, to calculate the closing cash balance, we take the opening cash balance plus the net cash flows for the period and add them. And then we drag. So when we compare these figures, this figure should be equal to the closing cash balance in the balance sheet. And as we can see, the balance sheet shows that for 2021, it was 0. For 2022, it was 3823. So we must have made a mistake. And as I asked, what do you do when you realize that you made a mistake? Now, if it was manual, if you are writing it on paper, you would have to cancel this work and redo it. But now the beauty of Excel is that you can easily just pinpoint where you made a mistake adjust it, and then the figures will flow. The figures are going to readjust themselves. And in this section, it is obvious, it is rather pretty obvious where we made a mistake. Can you see where we made a mistake? Pause the video and see where and see whether you can get where we made a mistake. Have you seen? Now, where we made a mistake was in the depreciation, right? We added back the depreciation, but when we were calculating the cash flows from investing activities, we did not consider the effect of depreciation on these balances. So what do? We simply adjust these figures to calculate the balance for each period for property, plant, and equipment. They must have subtracted the depreciation. So to calculate the amount invested in property, plant, and equipment, we add back the depreciation. So, and for 2021, depreciation was 800. So add 800, hit enter. For 2022, the depreciation was 750. So we add 750, hit enter. And as you can see, the figures have automatically readjusted themselves. So the closing cash balance is 0 for 2021, just like it is in the balance sheet, and it is 3823, just like it is shown in the balance sheet. And that proves that our income, our statement of cash flows, our statement of cash flows is accurate. Try and do it by yourself and see whether you can get it right. If you have any question, do not hesitate to ask. But for now, happy revision and analyzing. See you in the next video.